I'm the Tax Geek, and this is your taxes oversimplified. Today we ask the question, what is adjusted gross income? If you ask most people what is the most important number on their tax returns, the vast majority will say, my refund, or if they're less fortunate, what I owe. Sorry folks, arguably the most important number on your tax return sits on line 11 of page 1 of your 1040. This is your adjusted gross income. Since I refer to adjusted gross income frequently throughout these videos, I felt it was time to define this important number and tell you how it's calculated. Don't think it's important? Here is a listing of tax advantages that are dependent on knowing your adjusted gross income or some modification of it. I'll give you a minute to look it over. In most of these cases, your adjusted gross income sets upper limits on tax credits and deductions. So that being said, how do you calculate your adjusted gross income? First, you start with your gross taxable income. This is all your income that is subject to taxation. What income is taxable and what isn't is a story for another time, but the general rule is all income is considered taxable unless the government says it isn't. Now, to go from gross taxable income to adjusted gross income, we need to understand the concept of adjustments. Adjustments are special tax deductions that do not require exceeding a threshold, unlike itemized deductions, which must exceed your standard deduction to benefit you. So, for example, to take the Educator Expense adjustment, you simply subtract the amount from your gross taxable income to arrive at your adjusted gross income. It does not matter what your standard deduction is. Adjustments are listed on Part 2 of Schedule 1, and the total is transferred to line 10A of Form 1040. So here's a rundown of the most common adjustments. Deep dives into many of these adjustments will be the subjects of other videos. As these videos are produced, cards will be inserted into this video and links to those videos will be added to the description. Teachers usually spend significant sums of money on classroom supplies. Any teacher or administrator at the K-12 level may take an adjustment of up to $250 of these expenses. Of course, the educator must be able to produce receipts of these expenses upon request. If you have a health savings account, you may take an adjustment for what you contributed out of pocket. Do not include employer or employee contributions that show up on your W-2 with code W. These contributions are pre-tax and have already been subtracted from your gross income. If you are self-employed, you may adjust your income by 1/2 of the self-employment tax you must pay. That gives you a deduction for what would be the employer's part of the Social Security and Medicare tax if you are not self-employed. Other adjustments for the self-employed will be the topics of other videos. If you withdraw money from a time deposit and are assessed a penalty for early withdrawal, you may adjust your income by that amount. This assures you are not getting taxed on income you did not receive. If you pay alimony, you may adjust your income by the amount of the alimony paid. This adjustment is only available to taxpayers with divorce decrees prior to December 31st, 2017. You must provide the date of the divorce decree and the Social Security number of the receiving spouse. Child support is not deductible, nor is alimony from divorce decrees from January 1st, 2018 onward. If a spouse owes both child support and alimony and pays only part of it, the amount is assigned to child support first, then deductible alimony later. Here's a quick example. Gail owes both $500 a month child support and $1,000 a month alimony to her ex-husband, Dale. The total for the year is $18,000, but Gail only paid $15,000. In this case, $6,000 would be considered child support and only $9,000 would be deductible alimony. If you contribute to a traditional IRA, you may adjust your income by the amount of the contribution subject to limitations. IRAs will be discussed in much greater detail in another video. If you pay interest on a student loan, you can adjust your income by the amount of interest you pay, subject again to limitations. The overall limit per tax return is $2,500. This adjustment starts to phase out at modified adjusted gross incomes over $70,000 for single people and $140,000 for married couples filing jointly. Wait a minute. How is the phase-out determined when the adjustment itself affects adjusted gross income? Doesn't that just go around in a circle? This is where the concept of modified adjusted gross income comes into play. In this case, the adjusted gross income used to compute the phase-out does not include any potential student loan interest deduction. In fact, many of the adjustments involve phase-outs based on a similar modification of adjusted gross income. And finally, we come to the adjustment for tuition and fees. For the last several years, this adjustment has been in and out of the tax code, and currently it's in. This allows you to take an adjustment for tuition and fees paid at an eligible institution for an eligible student. This adjustment can be useful if you otherwise would not qualify for a more generous education credit. The adjustment is limited to $4,000 and starts to phase out at modified adjusted gross incomes of $65,000 for single people and $130,000 for married couples filing jointly. And that's a quick rundown of adjustments most taxpayers can take to compute adjusted gross income. Links to more information, as well as videos that take a closer look at these adjustments, are in the description below. If you found this video informative, please give it a thumbs up and subscribe for more content. Please share this video with anyone who would find this information useful. If you have any questions, comments, or suggestions for future videos, please leave them in the comment space below. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.